Okay, Elodie and Ingo, please come. Let's talk about Adyen. Let's talk about how to build companies. Adyen is one of those unicorns from Europe, which I guess a lot of people know because you have been a partner for NOAH since almost the very beginning.
Yeah, that's right.
Peter has been at almost every conference and is excusing himself today. But not a lot of people know ICONIQ. Elodie, we are also talking later, just the two of us. Let's focus a little bit on Adyen for now. And ICONIQ is, I think Adyen was your first deal in Europe.
Yes, that's right.
But let's talk a little about Adyen, Ingo. I mean, Adyen is not just a normal payment provider. While payments usually is a very unsexy piece of our industry, you guys made it sexy by signing very quickly many big, also American customers. Tell us a little bit about Adyen. You're the CFO. Please go ahead.
Okay, great. So Adyen is a different type of payments company because we basically manage the full stack. We help large international merchants to accept payments everywhere. And the main differentiator is that a payment is going directly into our data centers to Visa, MasterCard. So we completely rebuilt the infrastructure that typically is run by banks. And by doing that, we come to much better conversion rates for our customers. So the large players like Uber, Facebook like to work with us because in the end, more transactions get approved. And I think that's in the end where it's all about. You want to, if you do massive volume on our platform, you want to have the best auth rates available. And that's why we're working for every day.
Right, and so it's better conversion, it's also good price, and then I remember when Peter told me how you opened up the Latin American market for payments. Also, I think it's also global coverage that you have in every country the ability to provide payments online. Is that right? Is that a differentiator?
I think that's indeed a very important differentiator because if you want to partner with the large e-commerce giants and they want to roll out internationally, you need to be prepared for all markets. So from the beginning, also because of course Amsterdam is relatively a small place, we said let's take a global approach and make sure that we follow our customers. And that has been basically the geographical agenda for our growth. So we're always following our merchants. That was also one of the reasons why we saw an opportunity in LATAM and we opened up our Sao Paulo office there a couple of years ago.
Well, congratulations on that. I mean, going global has always been a big theme at NOAH, and we encourage the European champions to venture out into other continents. But rarely a company has managed to win so many customers out of Europe. What are your lessons learned? Like, what was Adyen doing right, and what did you do wrong when you tried to expand globally?
I think what we did right is that we started early internationally. So we started the company or put the platform live in 2007. And we already started in the US in 2008. But it takes time. And I think when you're very ambitious, you want to move fast. And I think it took us a couple of years to really get traction in the US.
And how did you start with like a country manager there? Or?
Yeah, we started off with a country manager there who was really sales focused. He came out of the network.
Is he still the same?
No, no, because I think that's also a part of growing, that you need to adjust the organization all the time. You need to make sure that you basically are ready for the next phase really in advance.
The Criteo guys back then, they told us when they were on stage, they always hired people 2-3 years ahead of their needs in order to have them just in time.
Yeah, exactly.
When they need them.
That's what we try, and it's sometimes really difficult because also we made our mistakes. I think one of the mistakes we made here in Europe is that we started too slowly opening up the offices in the European cities because we thought we could do everything from Amsterdam.
Is that right?
But I think it is really important to be local, to be close to our customers, that if there are questions, that you can service them very quickly.
Okay, so let's go to Elodie. I think when ICONIQ did the investment, you weren't at ICONIQ, but
That's right.
you joined
Quite
recently
recently.
the firm. Can you say a few words about ICONIQ for us Europeans?
Sure.
It's this mysterious like super family offices from digital people from the US, but it would be nice to hear you,
bit more
in
of the
your
story.
words. Yes.
Yeah, sure. So ICONIQ was started as a family office. It was primarily composed of some of the more notable tech gurus in Silicon Valley, including Mark Zuckerberg, Sheryl Sandberg, Reid Hoffman, Jack Dorsey, and some of the other kind of go-to guys from Silicon Valley. Very quickly it became apparent that the value of that network was very attractive, not only to the entrepreneurs that we were backing, but also to a number of other kind of high-profile families globally who were either not quite up to speed on what's happening in technology or just wanted to have exposure to that kind of tech scene. And so the network has expanded now to around 250 of the leading families in the world, and they come from all kinds of sectors, travel and retail and some fairly well-known brands that people would recognize in their daily life. And the real motivation behind the investment arm, so the private equity group at ICONIQ, which is the team I'm on, is to focus on finding best-in-class entrepreneurs and to facilitate knowledge sharing from entrepreneurs who've already demonstrated that they're best in class and helping that knowledge flow into kind of the new era of world-changing entrepreneurs. And so it's been really exciting to join that team and to think through how we can continue to augment the access that our entrepreneurs have to those who have already really demonstrated success and who can give a lot of operating leverage to kind of this next wave of entrepreneurs. And so here we are. We're very excited about expanding our presence in Europe. I think Adyen was a huge success for ICONIQ. Really kind of set the bar quite high for future activity that we'll be doing on the European scene.
And you don't have offices in Europe, I believe,
No,
but you are
not yet.
in the US. And
Yeah, exactly. So we have an office in Manhattan. We have an office in San Francisco, Palo Alto. We actually recently opened an office in Singapore. And I think there's kind of all cards are on the table in terms of how we view the growth over the next 5 years. But I think that, especially for me personally, coming from a very international background, when I think about investing, Europe's going to be a big piece for ICONIQ.
we certainly hope so. So Ingo, did the ICONIQ people give you access to potential customers? Did they deliver on their promises to open up their network to you?
Absolutely. Yeah, I think it's really important to us to just not get the funds, but also access to the network and basically work together, get introductions, make sure that we broaden our network. And yes, it is really helpful to be connected. I think it is in general a strategy that we have followed over the past years, that we want to be a global firm, but we also want to have a global shareholder base. And by having shareholders from Singapore, London, New York and Silicon Valley, I think it's really well distributed and having the real coverage that we're looking for.
Right. So what's next for Adyen? We had the CEO of Deutsche Börse here on stage who was talking about how important it is to be public, because when the shit hits the fan and the private capital markets dried up, you can always tap the public markets, or there's an easier way to raise capital. Will Adyen go public one day?
Maybe. I think for the moment we're focusing on execution. We've been profitable since 2011 and are cash flow positive. So there is no urgent need for additional capital. And I think for us as a team, it's most important to stay very focused on the operation. And in payments, it's all about volume.
Yeah.
Although we grow very quickly, we doubled basically 3 years in a row. We're still we want to get to that next level, that trillion volume, and that's still a couple of years away. So to get there, you need to stay focused on execution instead of anything else.
Okay. And what's ICONIQ's usual exit plan? I guess your LPs as such have very deep pockets and
Right.
They're very patient.
Exactly.
But what is your usual exit horizon and hope for investments?
I think it really depends on individual businesses. Right now, we actually had 2 companies go public in the last month.
Can you speak up a little bit
sure.
and not so fast? We
Sorry.
are German, sometimes
Yes,
French.
yes,
We don't
of
understand you so well.
I
don't
could
know.
just speak in German if you'd rather. But we just had 2 companies go public in the last month, actually. A company called Blackline and a company called Coupa.
Sorry, what was the name?
Blackline.
Black Lane?
Blackline, yes, it's accounting software, and a company called Coupa, and it was actually an opportunity for ICONIQ to buy in the IPO, so I think...
Oh, really? So you bought in the IPO?
in both of them. So
for the other part of ICONIQ?
No, it was, I think, through our fund still, but...
Still the same fund, basically?
Yeah. The unique piece of the ICONIQ story is that our LP base is primarily families. It's not really made up of institutional investors, and those families are taxable humans. And so the incentives really aren't to generate, kind of an overnight return. They're really looking for something that's going to be a little bit longer hold. And so we have a tremendous amount of flexibility around that front, and we have kind of endless patience when it comes to returning capital. And the kind of mind-blowing thing about ICONIQ, and one of the reasons why I joined the team, is that they were able to raise 3 funds without really having had a lot of returns, and some of that comes from obviously the quality of the investments that ICONIQ has made in the past, and the other part is that we have LPs who are just patient. So it's a different trajectory than a lot of other VC funds out there.
So payments is an industry where you have giants, right? You have Apple going in with Apple Pay, obviously you have Google Wallet, PayPal. How many takeover offers have you received since you started Adyen, and how difficult it is to stay focused and disciplined, as you say, and don't get distracted by high numbers coming in?
Yeah. I think it is relatively easy to stay very focused. It's basically a dream that we have. We want to build something unique, and if you want to build something
you
unique...
don't want to be woken up during your dream, you want to execute it.
Exactly, yeah. It's so easy to walk away or run away from a dream and sell it. It's all about thinking about the long-term trajectory that we're on. We're quite proud of what we've built so far, but we also feel that it's just a start. There's so much momentum that we currently have, and we like just doing what we do. So,
and I understand. So you're profitable since 2011.
Yeah.
But you're one of those companies who reinvest the cash flow the business generates in future growth, I believe.
Yeah, absolutely.
And since you are the CFO, what is the trade-off between focusing on revenue growth versus showing sustainable or sizable profits coming in? For the fundraising, when you spoke to investors like ICONIQ, what do you feel like was more important to them?
I think it is very important to gain market share, but at the same time you can only gain long-term market share if you are making a positive margin on a customer. And we have always been very transparent in pricing. I think that's one of the types of feedback that we quite consistently get from our customers. So that is highly important to us. So it's finding the right balance between having sufficient margin. I think it's good that we work with a lot of large customers. So pricing in this industry is, of course, on a unit basis. And we can have good discussions on the economies of scale. And then, because the volumes are high, you get to a very good margin. That's basically the game that we play, and I think profitability is a result of that.
This sounds very much like the US approach, like proving that unit economics work and then scale it with the help of outside capital. Did that remind you of some US high-profile companies who said, hey, these guys are actually quite similar? And
I think it depends on the companies. I think there's a camp in the US that believes in growth at all cost, where those unit economics don't always prove out, and I think those are not the types of investments that ICONIQ is excited about. When I think about our investment strategy, it's very much one of the core pillars is around demonstrated improvement unit economics, where we feel very comfortable that the money that we're putting in is going to actually scale the business in a way that makes sense long term. So, there are interesting businesses in that camp, and a lot of them are in our portfolio today. But there's also very much a camp that doesn't worry enough about the quality of their unit economics.
So Ingo, how many investors you have? You have like big five, General Atlantic, Index, ICONIQ.
Yeah.
These are, I think, your institution.
Temasek.
Temasek.
From Singapore.
I mean, these are like some of the best names in the industry. When is the time where Peter and you think that you would switch from market share or market share growth to, okay, we're actually happy with where we are. We feel like we maxed out. We should now focus on cash flow generation. Have you set a time like that? Is that like you say that you have a dream, is that like a roadmap to that? Or is it a ad hoc kind of weekly discussion?
I think it is just a matter of economies of scale. So we're very confident about the unit economics. And if we keep on adding volume to the platform and we keep our cost base as it is,
it's great incremental margin.
Exactly. So that's the strategy. I don't think that we have anything in mind that we say, okay, we're going to slow down now. Absolutely not. We want to continue growing. We launch new products with the point of sale product that we've launched over the past years. And we strongly believe that that's just the beginning of what is our future.
Changing a payment provider is tough, no? I mean, it's like hosting a little bit. It's one of those things, when they work, it's very, very hard to touch. And you can't really argue, oh, I'm going to save 0.1% of your revenues. How do you pitch as a company big potential customers to switch from the incumbent service provider on payments to Adyen?
So yeah, I completely agree with your observation that it's sometimes hard to switch, but at the same time there's always a problem to be solved. There's always a market that is difficult, and I think that's our unique approach, that we try to get in, we try to help the merchant, work with the merchant, start in a difficult market, prove how we can help them, and if then you basically hold up to your promises, it's relatively easy for merchants then to give more volume, because it's one platform globally. So once you're integrated to our platform and you work, for instance, in Brazil, you can easily also switch on the US. And that's a complete different situation, for instance, with a couple of our competitors, where you need to go to different platforms in the different regions.
I think it would be really wonderful to understand when you think about Adyen relative to some of the other players in the space. Payments is a crowded
Elodie,
space.
I cannot understand you, and if I'm not able to understand you, these people are not understanding you at all. Can you please speak a little bit slower? It's impossible otherwise.
No problem. I'll try. I talk very fast, so I'll work on slow.
If you want to do more deals in Europe, you may need to learn how to speak because it's impossible. Again.
Sure. I was saying payments is a very crowded space globally.
Yes.
And Adyen is a relatively small company relative to some of the more established players in that space.
But let's talk about it. The largest one is WorldPay, right? And like the transaction value of WorldPay, they went public. It was a Bain and Advent deal, I believe. And how much you publish your transaction volume. It's pretty much the only number, I guess, you publish, and you double every year. How much smaller are you to WorldPay?
I think from a volume perspective, it's about 5 times.
5 times smaller,
right? But I think if you look to, for instance, Chase in the US, there's, I think, still about 30.
Which one?
Chase Payment Tech.
Okay. 13
or 14 times bigger. These are the type of ambitions that we have. So we want to grow the company 20 times, because then you have the skill that we're looking for. And
what are the key differentiators that your platform offers that you don't feel the other providers can match, and that makes you win deals?
I think the key differentiator is that we have one platform globally, end-to-end, no third parties involved. If there is an issue, you call us and we have everything under control to solve it. And that's, I think, what no one else has. That's a very important one. The second one, I think, is our culture. We have a culture wherein it's very important that our colleagues work directly with our merchants, not just the account managers, not the sales managers, also the developers. And by having this really merchant-driven approach, you work with them, and because you work closely with them, you understand their problems, you are also able to develop new functionality for them. And by having quick releases every 4 weeks, we are able to help them quickly and get more business out of it.
And when you think about growing the company, you guys have really amassed significant scale in a short period of time. Businesses that tend to grow at the pace that you're growing often encounter various growing pains. Could you highlight a few of those growing pains and how you resolved them internally?
Yeah, I think you always have growing pains. I think the main thing that we're focused on is keeping our company culture the same. And I think we're quite successful at that, but it needs a lot of attention all the time. I think secondly, I think of course if you grow so quickly, and I look at my own domain in finance, of course our platform is in itself an important accounting system, but all the other parts of accounting we still basically do on our first systems that we implemented in 2007. And if you, at the size that we currently are, you also need to replace that. So that's one of the things that we're doing at the moment, making sure that we get to a new ERP system and are ready for the next phase.
Well, excellent. Ingo, send our regards to Peter.
I will, thank you.
We're a very happy customer of Adyen. Your tickets got processed through Adyen's payment platform. And we have no complaints. We're very happy with everything. Thank you so much, Ingo.
Thanks, Marco. Okay.